Hey everybody, I wanted to share 5 minutes of my update from October 24, 2024. The update went to paid subscribers of my newsletter, Crypto is Easy, but I'm going to share this little snippet here on YouTube. It's about the HODL bands, changes in specific HODL bands, and what that might mean. I use the realized cap HODL waves, which is a little different than what a lot of people use. It gives you a little different perspective on the market, and I hope you enjoy it. We continue to see selling from that 1 to 2 year band, also the 2 to 3 year band. We can see this in the realized cap HODL waves. It's a different way to look at this. This metric, what it does is it weights the value of the Bitcoins within each HODL band, meaning a cohort of people who have held that Bitcoin for a certain amount of time. 2 to 3 years, 1 to 2 years, 1 to 2 weeks. They're all different bands. This is the bands for the ones who have held from 1 to 3 years, split into two. The bottom is the 1 to 2 year band, and this higher one is the 2 to 3 year band. I like this because it gives you a sense of perspective about just how much influence each of these different cohorts has on the market as they move their Bitcoins or when they do. 1 to 2 year holders, you can see, just recently, it's been a pretty steep drop. If you zoom in, over the last 6 months. May not seem like a lot when you look at this, but it's a good 18% down to 16%. That's 2 percentage points, which is like $30 billion worth of Bitcoins that have been trimmed from this group this month in terms of the market value of those Bitcoins. 30 billion. Ideally, we would like that to stop, but I don't worry about it because when you look at where the Bitcoins are going, they're going to newcomers. They're going to this chart shows people who have held Bitcoin for 1 month or less. And what you see these little bumps up, down, bumps up and down. That's a sign of healthy churn. New money comes in, the market absorbs that money, the bands swell, then it goes to people who are a little older, 1 month to 3 months, 3 months to 6 months. New batch of money comes in, swells. That money goes to older and older and becomes older and older. The market's absorbing this new money, it's sticking around. So the selling from OGs, it always weighs down the market. It's not that much of a problem as long as you see this kind of pattern as opposed to, 2021 where it was just down. Starting even from the later part of 2021 or back in 2018 down. Doesn't mean the price had to keep going down. This was a big upswing. This is a good 50, this is a 100% move right there, right in the middle in March. But the underlying behaviors showed that it was just going down. To some extent, yeah, price does it, obviously the price is going down. Then when you do the calculation that formulates the metric, it will go down. But the fact that price has gone down, price did go down. It went down, what, 25, 30%? From here to here. It doesn't show it on this chart. It looks horizontal because of the way the price is rendered, but that was a good 30%. In spite of that, the bands are oscillating like an accordion sideways. And we want that. That's what builds the foundation for the next move up. Newcomers need to see the people who exhibit these behaviors need to see the price go a lot higher before they sell. And they're already sticking around. They're not panicking over these 10 to 20% upswings or downswings. As they become, certainly you want that them to be more of the market, but the way the metric is naturally calculated, yeah, they do become more of the market. But then you look at the 1 to 3 month band and you can see, well, that's flattening out, growing, maybe starting to grow, and so on and so forth. It's hard to tell how much the Wall Street ETFs skew these HODL metrics because because they can buy, sell, ship off moves their Bitcoins independent of what their customers are doing, as opposed to most exchanges and anybody who has a custodial wallet, where when you move Bitcoin in or out, that registers on the blockchain. It is you're moving a specific Bitcoin. With the ETFs, it's just a big pool of Bitcoins. They can move them however they want because people are not buying Bitcoins, they're buying into a fund. All the ETF needs to do is make sure that the value of the Bitcoins equals the value of the shares outstanding. And then when somebody needs to sell a share, they can sell any Bitcoin. You can sell the one that just came in today and it appears as something on the short-term band. Or they could sell one from 5 years ago and it would appear on the long-term band. But it doesn't say anything about the actual behaviors and intent of people in the market. Whereas anything that goes to a personal wallet does reflect actual intent and actual behaviors. But I don't think the ETF flows matter that much yet. Over time, little by little, it'll become more significant. Certainly, if the ETFs grow faster than they are, then yeah, that will also make it more likely that the ETFs are skewing the metrics. Right now, the ETF flows roughly follow proportionally the overall crypto market flows. So I don't think we need to worry about that. We consider the readings directionally valid. I would not, just as an aside, I would not compare anything. If you see anything that says realized here, anything that says realized, and there are a few other metrics, but just as a simple rule of thumb, with the realized metrics, anything that says realized, do not compare absolute levels, do not compare mathematical relationships over time to a previous time. But in terms of the direction that things are moving and some of the inferences you can make, yeah, I think that's fine for now. For now. I'll finish up with altcoins. Nothing has changed since my last update.